this is Ria from SAMAYA and welcome to third and the last part of Bank Audit. And now we'll discuss about advances and capital. What are the things we have to check for auditing such kind of items in balance sheet? And with no delay, we'll move on to this. Advances. Auditor concerns with regards to audit of advances, what all he has to check for. Advance amount outstanding as on balance sheet date. No unrecorded advances. They're talking about the completeness of information. What we have also discussed it earlier. Basis of valuation and recoverability of advances. Advance relevant for statutory and regulatory requirements and appropriate provisions with respect to RBI norms, AS and GAP, and internal controls over advances. What are the internal controls that have to be followed while giving advances? First thing, it was categorized into two portions, that is prior to making advances and after making advances. First thing, prior to making advances, what all we have to check? We have to check the credit worthiness of the borrower, and we have to check whether the proper competence authority, whether the advance amount was within our authority or not. Third thing is that we have to check for the documents that were in favor of our bank name or not. We'll have to check for that. Area of credit appraisal proposes credit worthiness and loan applications and credit worthiness of borrowers. This all boils down to single point that what we have discussed about credit worthiness. Sanction from proper authorities, as we have already discussed it. Documents executed by the borrowers. We have to check these three things prior to the advancing loan, and compliance of loan policy of bank. And such policy have to be in compliance with RBI system laid down for renewal and renewal of advances. How frequently the advances policy have to be renewed? Yearly once. It has to be reviewed yearly. Substantive audit procedures. What do we have to do? We have to examine all large advances, SMA 1, SMA 2, or quick yearly mortality case. SMA 1, 2 was something like they were not NPAs for 90 days or more, right? That more than 90 days. The SMA 1, SMA 2, SMA 3 were three categories that were categorized into 30 days portion before 90 days. That is either the principal or interest overdue below 30 days, SMA 1, below 60 days, above 30 days, that is SMA 2, and 60 to 90 days segment is SMA 3. And restructured account. Restructured account is that all the overdues that were again converted into principal, and or the EMIs were just made it a restructured. Adversely commented by internal auditors. Okay, these were some like red flag areas, red flag accounts, and single customer ID for all accounts of such customer. That is, the customer ID should not be duplicated. And why they're talking more about is that because there could be a chance of window dressing the NPEs through duplication of customer IDs. That's why. Recoverability of advances. What do we have to? We have to review the audit reports, statements submitted by borrowers, latest financial statements, reports on inspection of securities. And these are all with regards to the advances, checking of advances. You need not remember whole thing. Remember something that was repetitive in nature. You see, this was repetitive and this was repetitive. And customer IDs is something that you could easily remember that. And you could also review what you could review. You could review on all the documents for their audit reports or latest financial statements. So what you have gone to audit for? You have gone audit for the financial statements and reports, internal auditor, etc. And to check for the advances completeness or not. And obviously, as we have discussed earlier, for every point you have to write about statutory and regulatory requirements. You have to write that 60%. If you write enough, it would be more than enough. Iraq norms. Iraq norms is income recognition and asset classification norms. How you classify that? Verify if CBA is identifying crystallizing the NPA. What is crystallizing of NPA? Crystallizing of NPA is, you see, interest or due date is accrued onto that account. But in case of NPA, only on the receipt basis you have to recognize the revenue. That is what crystallizing of NPA is. With no manual intervention, that is, you have to crystallize the NPA without any manual intervention. What do you have to examine? Examine classification of advances is appropriate and secured and unsecured portion segregated correctly. Thus, they are talking about segregating secured, unsecured portion, and advances have to be classified correctly, like standard assets, substandard assets, loss assets, doubtful assets, and loss assets, and review date of NPA. They're talking mostly about that, and with all the things with regards to classification. And what is account regularization? Account regularization is after account have turned into an NPA or any kind of SME, it has all the overdue amount was paid and it was shifted from the substandard asset to a standard asset. So you have to check the payment sources were of genuine. It is not that even though it was done under way before the year-end process, not only for window dressing, you have to make sure that they are from legit sources and not made only for the legit sources. Verify that payment of overdue is from genuine sources. If genuine sources, yes, then it's not an NPA. If not NPA, you have to recognize it as an NPA, even if the overdue amount is paid by the end of the year. If the branch provides further funds, including debentures, carefully assess the sources. And if account has inherent weakness, it's an NPA. Inherent weakness is mostly like overdue, or like an overdraft account or a cash credit account. What's cash credit or have to do is that at least 80% of the sanction, mostly the sales have to fall under this account, right? Only the interest portion is getting credited on that. That's a matter of a weakness, right? That's a red flag account. So what do you have to do? You have to treat that also as an NPA with inherent weakness. NPA shall be recognized on past due overdue concept and not on balance sheet date. Okay. Drawing power. Talking about more drawing power, it's mostly for the overdraft accounts. Drawing power calculated as per credit policy of bank, formulated by board of directors, agreed by the auditors, reflected from respective sanction letters. And special consideration for sundry creditors, stocks under LCs of bank guarantees, working capital advances in construction business, stock auditor comments. These are all the areas we have to put some special concentration there. And accounts with temporary deficiencies need not be treated as NPA, like DP exceeds limits or not reviewed, need not be reviewed. You see, up to for what are the temporary deficiencies were like up to 20% of the sanction limit for 90 days, the DP could be uh, exceed. The DP could exceed. Until then, it is not treated as an NPA. That is what we have discussed in the earlier part. Stock statement shall not be older than 3 months. Obviously, if so, considered irregular. This is what we know. And accounts where limits, regular or ad hoc, are not reviewed from 180 days from the due date is an NPA. You see, stock statements older than 3 months, NPA. If the account or the overdraft account was not reviewed, the limits were not reviewed, the sanction limit or the sanction limit was not reviewed for 180 days or more, then it would be treated as an NPA. And if temporary deficiencies, if not temporary deficiencies, were also treated as NPA. For temporary deficiencies, were not treated as NPA. You see, the asset classification is borrower wise, not the facility wise. If debits from devolvement of letter of credit or invoked guarantees are kept in a separate account, the outstanding balance shall be treated as a borrower's principal accounts from Iraq. And that's it. And now we'll move on with government guaranteed advances. If government guaranteed advances becomes an NPA, interest shall not be taken unless interest is realized. That's what we do for all NPAs. If such credit facility is backed up by central government, it is treated as NPA only if the central government repudiates its guarantee when invoked. This exception is only to central government, not to state government, not to state government. If banks had not invoked CG guaranteed overdue, then the reasons to be mentioned in LFAR. The credit facility that was backed by central government will be treated as NPA only if central government repudiates its guarantee when invoked. That is, so the central government is saying that we cannot pay the bank. You please figure out it yourself. Then, then that's a situation. When central government can't make it, can't keep up its promise to pay back to the bank, that is called central government repudiates its guarantee. Only then it will be treated as an NPA. Okay, now agricultural advances. NPA norms are applied with respect to crop seasons. That is not 90 days or 30 days. It's with regards to the crop seasons. So that is short term or long term. It would be determined by, which were determined by SLBC, means that crop seasons were determined by this committee. And these norms are applicable to all direct agricultural advances listed in Master Circular on lending to priority sectors. As we have already discussed, priority sectors were like housing, education, agriculture. Agricultural loans other than in circular, identification of NPAs is a non-agricultural advances. So this is what all we have to write with regards to agricultural, that NPA norms were applied on base of crop season determined by SLBC, that is whether short term or long term. And these norms were applicable to all direct agricultural advances. Agricultural loans other than in circular, that is they have a few loans that were mentioned in master circular. Other than those, it would be applied as a number of days categories, not on basis of crop season. Provision for standard assets, or for even for standard assets, we have to put the provisions category. like 0.1 or 0.4, depending upon that. And auditor should check for RBI circulars and standard assets in different sectors, provisions to be created at a variable rates. That is, different sectors have different rates. Bifurcation of standard assets has to be checked and certified at a branch level. We have to check for the classification of that standard assets and substandard assets. And with regards to the restructured advances, restructuring means lender, for economic or legal reasons with respect to borrower's financial difficulty, grants concession to the borrower. That is, they may waive off the interest or may convert the overdue interest in with to the convert them into the principal amount and reduce the EMI portion also. That is, the bank is granting some concession to the borrower, which includes like modification of terms and conditions, alteration of installments, and additional credit, giving additional credit, etc. And banks can restructure what all the advances it could restructure. It could restructure standard, substandard, doubtful, but it cannot restructure loss asset. Banks cannot restructure accounts with retrospective effect, only prospective effect. It might be asked in an MCQ. Please make a note of it. On restructuring, account will be downgraded, that is standard to substandard, and NPAs will remain in the same category. Banks can restructure the standard assets. When you restructure, you have what you have to do. You have to downgrade that. You have to convert that standard into substandard asset. Why do we actually restructure? When there was a difficulty, right? Only then we restructure. So it's mostly that. But when you're restructuring an NPA, it's already in substandard, you need not do that. NPA could be over same category. With regards to upgradation of account, upgradation as per RBI guidelines, okay, there might be a possibility of incorrect upgradation on basis of partial recoveries, that is, overdue portion might have wiped out completely, and there can also be a possibility of recoveries after cutoff date and account upgraded on balance sheet date. What they're talking about, they're talking about the upgradation, that is standard, substandard to standard or doubtful to substandard. Whenever the accounts or advanced accounts were upgraded, what we have to check whether they were done as per RBI guidelines, and there shouldn't be any incorrect upgradation on base of partial recoveries. That has to be legit. And there can be also possibility of after the cutoff date, and that is only for the window dressing, only for the just before the balance sheet date, if they could put on infuse some amount to not make it as NPAs or to upgrade the accounts. You also have to check for that. And with regards to sale or purchase of NPAs, what you have to do? You have to examine the policies laid down by the board of directors, what all the procedures and valuation of NPAs and delegation and accounting policies. And NPAs has to be sold or purchased only on without recourse. That is, entire credit risk is transferred to the purchasing bank. You see, why do we sell NPAs? Usually we sell NPAs or mostly on a discounting factor. Even after selling it into a discounting, we cannot bear that risk, right? We also already had lost some amount. So we have to sell without recourse. And sale of NPA. NPA shall be sold only if they have remained as an NPA in books for at least 2 years. You see, overdue was more than 90 days, is turned into an NPA. From the point of that being an NPA, it has to be an NPA at least for 2 years to sell that NPA. Okay, you have to do that. But prior to that, you could put some remedial actions like giving it for factoring or any kind of remedial actions. This is they're talking mostly about the sale of such NPA, sale of that. NPA shall be sold only on cash basis and entire consideration is received on upfront basis. That is, you shouldn't exchange it for the shares or debentures or stocks. What you have to do, you see why they are putting so much instructions with this is a possibility of so much of fraud that could be involved in. So much of public money was involved in banks, right? So there were more regulations were there. We have to just understand the logic behind the each regulation, and it would be very easy for us to write in an examination too. NPA shall be sold only on cash basis, and entire consideration is received on upfront basis, not on credit basis. And bank shall not assume any risk for sold of NPAs, and NPA has to be removed from books of accounts. As we have already said, as we say, without recourse, what we should do? We should remove those from the books of accounts and assume no risk. And say if sale price is less than net book value of such NPA, there's a shortfall. So we'll debit that in P&L account. If sale price is more than the net book value, that is excess provision, has need not be revolved and utilized to meet the shortfall of the other NPAs that were there. You need not credit that in the P&L account. You need not realize the P&L account. Purchase of NPA. While you're purchasing NPAs, what you have to do? The bank shall not purchase an NPA if originally sold. That is, if I had originally sold my NPA 2-3 months back and I cannot repurchase that, what all the NPAs that I have sold. That's what they're talking about. The bank shall not purchase any NPA it originally sold, because it's also a chance of window dressing, right? Yes, it could also be a window dressing type. That's why they have specifically mentioned this point. NPAs are subject to Iraq norms. Okay, 100% risk weights are given to NPAs for the computation of capital adequacy. Okay, there is weights for while calculation of Tier 1, Tier 2 capital. We have some risk-weighted assets, right? For the NPAs, we have 100% risk weights there. Any recovery from purchase NPA first adjust to the acquisition cost, and then the excess would be treated as profit. You see, can we recognize profit on sale of NPA? No, we have to compensate it with the shortfall that was already done. So we have to create a provision for that. But can we recognize that as a profit on purchase? Yes. Any recovery from purchased NPA, you could recognize that as a profit. First, adjust it to the acquisition cost and then excess in P&L account. So you have to check, you have to make a note out of it. It is something, it could be confusing. And fixed assets, with regards to fixed assets, what all the things we'll have to check for: ownership, existence, and their valuation. Internal controls, what all the internal controls that with regards to the fixed assets you have to check for. You have to check the expenditure and accounts and information with regards to that. On expenditure of financial statements, or that with regards to acquired or self-constructed. That is, expenditure of financial statement is what the amount that be in the balance sheet, right? So we have to make a note of or note out of it whether it had got acquired or whether it was self-constructed. Accountability and utilization controls, and a certain of accounts are maintained at a branch or central level, or there's an or here, if anywhere it could be maintained. Information controls for availability of information. There should also be a proper information that has to be given. If it was maintained in a HO central level, for the branch auditors ask for the fixed assets information, they have to give the make the information available. For that, information controls has to be there. And location of title deeds, evidence in ownership. And okay, obviously title deeds with regards to the ownership and acquisition or disposal by branch properly communicated to the HO. Okay, these were all the things with regards to the internal controls. And you might write about the ownership or existence valuation. You have to check whether there were not information, and where it was accounted, maintained, and expenditures. And with regards to premises, verify the opening balances, acquisition of new premises. That's mostly you remember it as a tabular format. Opening balances, any kind of additions that were there, any kind of self-constructed assets, new premises. This is additions were categorized into two: acquisition and self-constructed assets, as we have discussed here. Yeah, in additions, and fixed asset register balance, that was closing balance. And for leasehold property, that is second categories. With regards to ownership, this is one, and for this is under the second category of ownership, that is leasehold premises, like capitalization or amortization of lease premium are to be examined. And if title deeds are at HO, obtain written representation from branch management and communicate to central auditor and mention in LFIR. Okay, with regards to the ownership, we have to do that. And as it's revalued, you have to check for the appropriateness of the basis of valuation, and revaluation, surplus or deficit accounting are to be examined. And fixed assets shall not include assets for own use, including employees. And for the other fixed assets, there's nothing much to remember this. For movable financial statements, attention towards recording the movements, that is physical verification at periodic interval. While transfer of asset, what do you have to do? We have to verify the accumulated depreciation. That also has to be transferred. We have to check for that. And intangible assets, you have to account it as per AS 26, impairment AS 28, leases AS 19. On sale of any fixed assets, what do you have to do? You have to check whether the profit or loss that was properly accounted or not. And there's nothing much to remember here. And with regards to other assets, there's a chance of 4 to 5 marks under this heading here. Inter-office adjustments, examining of inter-branch accounts are normally recognized or reconciled at central level. Okay, they are saying that these inter-branch accounts were normally reconciled at central level. Okay, the auditor should report year-end status of such accounts and date of reconciliation. Or what we have to report, he has to report in his LFAR, etc. about such year-end status and the date of reconciliation. The indication of outstanding entries, you have to provide information for debit or credit entries, and discrepancies for properly dealt with via books of accounts, and relevant information primarily from branch audit reports. And these were all the things. Interest accrued, and if interest accrued on all loans and advances were taken special consideration for the overdraft bills that were purchased or discounted interest in ordinary course of business. No interest to be realized as per AS 9, where it is a significant uncertainty about its collectivity. That is, they're talking about the, we'll see, read it in AS 115, right? If there was significant uncertainty about the collectivity, you should not recognize that income. They are talking same about the interest also. Interest in ordinary course of business. With regards to assets in TDS and advances, what you have to check for? You have to check that for 26 years has to be equal to has to tally with the claim of IT returns, and all the TDS certificates have to be collected by branch, and the original copy should be sent to the HO. And with regards to stationeries and stamps, it includes exceptional items like bulk purchase of stamp paper valued at cost. They have to be valued at cost. And normal stationery is charged to the P&L. Like there are insignificant items, have to physically verify the stamp papers, and any shortages would expose bank to a potential loss for misuse. That is, a stamp paper can do a lot of things, right? Consumed during the year are charged to the P&L account. That is what all the stamp papers that were valued at cost, what all the stamp papers that were consumed during the year was charged to P&L account, and normal stationery is also charged to P&L account. And non-banking assets required in satisfaction of claims. These are held with an intention of being disposed of, where it is like mostly if any person had not paid the had put some security and not paid the loan or advance amount, right? Then what do banks seize such cars or bikes or such property, right? What do they do? What they not if they seize a bike, they cannot start a biking rental. So what do they do? They save them. So they are with an intention to dispose of. Verify relevant documentary evidence like court order or arbitration award, and check if ownership is transferred or not, and provision of liability is as per AS 29, and compliance of Section 9 of Banking Regulation Act with regards to period of holding, till how long they could hold. Different assets have different kinds of holding limits, and that was not in our syllabus. Though on date of acquisition, assets are recorded at net book value of advance or net realizable value of such asset, whichever is low. That is on whose loan, on which non-repayment of the advance that the asset had been occupied, or the asset has been taken if required. That advance amount or the value of such asset, whichever is lower, has to be recorded. And we have to check for the ownership and the documentary evidence, and because it's intention, and also mention its intention also to dispose of. And others, it's like non-interest bearing staff advances. What you have to check for? You have to check for the relevant documentation and policy framed by bank, and ensure the availability, enforceability, and valuation of security, and relates to employees on roles as on date of preparation of financial statements. Loans and advances to officials and relatives. The loans are sanctioned by the next higher authority ordinarily, and such amount is reported to the board. These are all mostly like a staff advances, and there's nothing much that's not at all important. You could skip that. And security deposits with various authorities with respect to documents having terms and conditions, ensure that those security deposits is not due as per terms and conditions, and its recoverability. Create provision if doubtful to recover. Have to prepare a list of the security deposits that we have with various authorities, and you have to ensure that they were not due. You have already paid that, and you have to check for its recoverability percentage. If they were doubtful to recover, you have to create a provision. You see, for the electricity or telephone department, these are mostly recoverable. But if it's in a GST, you have paid that security deposit with regards to any kind of disputes to a GST department, that's something recoverable. You have to create provision for that. And for suspense account, obtain details of old outstanding entries in suspense account from the management, and if any provisions or written offs is required, ensure that it's made. For suspense account, what you have to check? You have to check old outstanding accounts entries, and any kind of provisions or written offs you have to make. You have to make that. And prepared expenses like reasonable allocation was there or not, and allocation of discounting or rediscounting charges paid by bank to different accounting periods is in consonance with the accounting policy followed by the bank as a whole. That is, they're talking about the bifurcation between two periods. And miscellaneous debt balances on government account recoverable from the HO. You have to review the aging statements. You have to review that, and examine the recoverability of the old outstanding items. Something that was recoverable, the balance, you have to check for its recoverability. If you have to make any provisions, you have to make that. And any kind of variances has to be recorded. You review in the and review with respect to previous year figures. You have to do that. And with regards to the final topic, verification of capital and liabilities. What's the things we have to check while checking the capital? We have to verify the opening share capital with respect to previous year audited balance sheet. That is, the previous year balance was should be the opening balance. You have to check whether opening share capital was taken correct or not, and you have to check whether there were any additions to the share capital. Increased share capital is examined with relevant documents like special resolution of board or prospectus issued, and then we have to check for the capital adequacy. It is the adequacy of capital resources of bank in relation to risk associated with its operation. We know that banks have to maintain a certain adequacy of capital. There have to be a tier 1, tier 2 capital with regards to some proportion of risk weighted assets, right? They're talking about that, and you have to check for the stress testing. RBI required every commercial bank, excluding RRBs and LABs, where board approves stress testing framework which integrates into risk management systems. Stress tests are designed to understand if a bank has enough capital to survive its plausible adverse economic conditions, like SVBC bank collapse that we have got here. Not that much of effect to the India. Bank maintain enough buffer to stay afloat under extreme scenarios, like all the Ukraine wars that have with regards to the banks of the Ukraine, and they're talking about that. And that is, stress testing is the ability of the bank to survive in a adverse situations. And with regards to Basel III framework, it relates to the capital adequacy compliance by bank that it has to achieve as per Basel III Accord. What is Basel III Accord? It strengthens the regulation, supervision, and risk management of banking sector. It is global regulatory standard on capital adequacy, stress testing, market liquidity risk. You see, what is Basel III Accord? It is the capital adequacy has to be maintained as per Basel III Accord. It's mostly like an act for the rules or regulations to maintain the capital adequacy for the banks worldwide. And what is Basel III Accord is maintained for? What it aims for? It aims at improving banking sector's ability to absorb shocks arising from financial and economic stress. Okay, that is it's to maintain some adequate capital adequacy. If all the depositors come and withdraw their money, they have to bank has to survive, right? So in order to maintain that situation, in that economic stress situation, the bank has to how well the bank could maintain or survive. Improving risk management and government practices and strengthening banks' transparency and disclosure standards. And Taiwan capital consists of, we have been talking about the capital adequacy, right? This is what the capital risk adequacy ratio is that Basel III Accord is talking about. Taiwan, its eligibility total capital funds divided by risk weighted assets and off balance sheet items. You see, the minimum capital adequacy, capital risk adequacy ratio should be the 9%. And what is Taiwan? Taiwan is total eligible capital funds is equal to Tier 1 plus Tier 2. Tier 1 consists of capital, share capital, and some disclosed reserves. And Tier 2 is mostly contains about certain specific reserves plus some subordinate debt. That was mostly in the Basel III Accord. We need not study that for further. It was not in our syllabus though. And reserves and surplus, it contains statutory reserves, capital reserve, share premium, revenue, and other reserves, including investment fluctuation reserves, balancing P&L account. They just given list of what are all the reserves that contains a risk and reserves and surplus heading. And with regards to the deposits, there were two types of deposits, that is current accounts and savings account, right? Both in connection, we call it them as CASA, current accounts and savings accounts. Verify on sample basis CASA is opened during the year with respect to KYC norms. You have to check for the KYC norms for the accounts that were opened, both for the current account and the savings account. Check that savings accounts are not opened for the business purpose. Savings for the personal purpose, current account for the business purpose. So you have to not you have to check that savings accounts are not open for the business purpose. Calculate interest on test check basis and no interest in current accounts. You have to check the you see savings bank do the balance in savings bank do have some interest that was accumulated, but there shouldn't be any interest for the current account. So you have to check the interest what was made in the savings bank is accurate, and you have to check that no interest has been made in current accounts. Ensure that current account debit balance is regarded as advance and credit balance is as deposits. And you see, mostly savings banks were all were deposits only because there cannot be a debit balance in a savings account. Inoperative accounts are higher risk areas of fraud. Um, that was not at closed accounts, but there were no transactions that have been taking place. Inoperative accounts are such accounts which were no transactions over a period of 2 years. Verify accounts that are revived or closed during the year. And we have to check for the inoperative accounts. And with regards to the term deposits on sample basis, interest rate, we have to check for the interest rate on bulk deposits, that is 2 CR or more, on closure of term deposit, check for the foreclosure penalty if required. And if a term deposit was made for 7 years and if it's got closed for the 3 years, the interest rate has to be reduced. And moreover, the interest, there have to be a penalty for foreclosure of penalty. When we do audit for the test term deposits, we have to check for that. And recurring deposits opened during the year, and correctness of the interest rate, as whenever there was any kind of accounts for which interest rate was for which interest is payable by the bank, you have to check the interest rate and whether the amount was properly due or not, whether that was correct, calculated correctly or not. And term deposits are issued serially and accounted in register. You have to document that. Talking about the documents there. Deposit designated in foreign currencies. How do you check that? Verify FCNR account, that is foreign currency non-resident account. This account is widely used by NRIs to store their income in a foreign currency. Open during the year to confirm RBI regulation compliances. Permissible debit or credits as per RBI directions and converted into rupees at the rate notified by HO, and the resultant will be debit or credit to the P&L account. And the interest is paid on 360 days basis. Not 365 days, it's 360 days with respect to FCNR. NRE's accounts are repatriable. That is, they have to be brought back to India. NRO's accounts are not repatriable, except all current income is subject to some certain terms and conditions. These are all the things you have to write. This is not tested in the ICA, but make sure to look at one day before the exam so that you could write it. I think mostly it would be a great question here to ask in our current examination. And borrowings in India, whether how to categorize the borrowings and check for them. Borrowings in India, borrowings from RBIs, other banks or other institutions and agencies, and borrowings outside India. Or what do you have to check? You have to verify the confirmation certificates like agreements or correspondence, and you have to obtain external confirmations like account balance confirmations, etc. Examine. You need not remember from here. You could also write it from the balance with respect to RBI's, balance with respect to other banks, or you could write from that. Examine the clear distinction of rediscount and refinance, and borrowing as per money at call and short notice has a proper authorization or not. They have to have a proper authorization. And with regards to other liabilities and provisions, inter-office adjustments. If credit balance is shown under the head, you have to write. We have already discussed the inter-office adjustments there, right? Interest accrued on deposits of borrowings. And with regards to bills payments, officer having signature book shall verify the signatures on demand draft, which we have already seen. All demands issued shall be informed to paying branch by an advice, which we also discussed. And if paying branch do not receive proper information or do not receive a credit, it should take immediate step for that. It's like giving information to the paying branch, etc. And bank should have a reliable private code for coding and decoding the telegrams, that is encrypted, end-to-end encryption. And with regards to contingent liabilities, the claims against the banks, you see these 5 to 6 points you have to remember, and it is widely used in bank audit, right? It's mostly tested portion also. So this is also a category question. Claims against the banks not acknowledged as debt, liability for partly paid investments, and liability on account of outstanding forward exchange contracts and derivative contracts, guarantees given on behalf of constituents within India or outside India, acceptance, endorsements, and other obligations and other items. Now we'll check how the audit approach has to be for the contingent liabilities. Contingent liabilities are obviously off-balance sheet transactions accounted in books of accounts and supported by underlying documents. The discounted disclosed. You see, these were all not important in contingent liabilities. Only these 5 points were important. You need not remember that, but just I'm giving it a go. The disclosed contingent liabilities do not include any crystallized liabilities. We have seen this crystallized NPAs, right? NPAs has to be crystallized previously, right? Contingent liabilities are based on the best estimates as per AS 29, including consideration for possibilities of any reimbursements. What they're talking about the documents has to be there, and it should not include any crystallized liabilities. It could be asked in an MCQ. Please give it a go. And contingent liabilities were as per AS 29. And what's the audit procedure that have to be followed? Bank guarantees are coterminous with the period of credit record from the date of shipment, and the test of completeness of recorded obligations, and review the reasonableness of the year-end amounts of contingent liabilities. Review whether comfort letters issued by bank have considered for disclosure of contingent liabilities. These were the audit procedures. What the audit procedures are? Bank guarantee should coterminous, that it has to start along from the date of shipment. Date of shipment, that credit period also has to start. And the test, you have to check the completeness of that, and you have to check the reasonableness of the contingent liabilities. And you have to also review the comfort letters also that were issued by the bank with regards to the disclosed contingent liabilities. Auditor's report. You see, what are all the things that auditor has to give report on? You have to give report on the balance sheet, whether the balance sheet was full and fair balance sheet and exhibit a true and fair view. With regards to the notes of accounts, he has to give report whether it's satisfactory or not, whether the notes of accounts, notes to accounts were satisfactory or not, and the P&L account is showing it, exhibiting a true balance of profit or not, and whether the transaction have come to auditor's notice. What are the transactions, significant matter transactions have come to his notice, and whether the returns received from branches were adequate for the audit. He also have to mention that what all he have to do. We have balance sheet, notes to accounts, P&L account, and the transaction that have come to his notice, and the returns that were received from the branch, whether adequate for the audit or not, and other matters that were brought to him. And all the other matters that were brought to him. And with now we'll move on to the next topic, that is rule number 11 of Companies Audit and Auditors Rules 2014. It is nothing to do, but this rule was applicable only when in these 6 scenarios. It is not so important, but we'll just revise it once. If the company disclosed the impact of any pending litigations, with regards to any pending litigations, and if the company made provisions for material foreseeable losses, or if it's a delay in transferring of funds to Investor Education Protection Fund, auditor has to report. And the dividends declared was whether the dividend declared is as per section 123 of Companies Act that we have discussed in the Companies Act. And with effect from 1/4/2022, the accounting software that the entity has should contain an audit trail to walk through the process as per the statutory requirements. And the management has represented to best of its knowledge and belief that no funds have been advanced, loaned, or received on behalf of ultimate beneficiary. Reasonable and appropriate audit procedures have been performed. And with that said, we'll just move on to the next topic, LFAR. It has to be given by statutory branch auditors and statutory central auditors. Both the auditors has to give LFAR. It's a form of questionnaire. It's mostly like a question where the observations or comments have to be provided by the auditors. And statutory branch auditors have to submit to statutory central auditors, and consolidation is done at HO. Okay. LFAR is submitted to ACB, that is the audit committee of board. It's a portion of board of directors. It was constituted by the board of directors itself. That is mostly the management. LFAR plus any relative agenda note plus board views are submitted to RBI. That is, the responses of board was submitted to RBI within how many days? Within 60 days from submission of LFAR by statutory auditors. And with that said, we'll move on to the next topic. Statutory central auditors provide additional reports. What all those additional reports should consist of? Consist of report on adequacy and operating effectiveness of internal financial controls and LFAR, compliance of SLR requirements that we have previously seen, and treasury operations as per RBI, and with regards to reconciliation of securities, Iraq as per RBI guidelines, and custody of unused bank receipt forms, and authentication of capital adequacy ratio that we have calculated earlier, Ghosh committee relating to frauds, and Jilani committee with regards to internal control. These are all the additional reports that were central statutory auditors have to give. What the statutory branch auditors have to give? They have to give LFIR only. That's it. And with regards to the concurrent audit, this is the last topic in bank audit. An audit which is done concurrently as a transaction takes place. It is not a pre-audit. It is to check the authenticity of the transactions in the shortest time possible. Concurrent audit was mostly done daily or on weekly basis. Scope of concurrent audit. The scope of concurrent audit, we have highlighted C, O, A, D, I. For what? For all the key areas of that. Cash, other items, advances, deposits, investments, forex transactions, and housekeeping were 2 extra points that we have written here. And when we see over concurrent audit, you need not remember a separate mnemonic that is out of nowhere. You could just highlight it from the heading itself. First 2 letters and audit, A, D, I, and forex and housekeeping. If you read that 2-3 times, it would be very easy for you to just highlight these 2 and remember that. Cash, other items, A for advances, D for deposits, I for investment, and then foreign exchange transactions and housekeeping. And these were all the key areas audit procedure has to be done. And the scope of audit should be clearly and uniformly determined by banks, by bank central inspection and audit department. As what we have seen, this is like an audit committee for banks. Audit committee is for the companies in general. Central inspection and audit department is for the specialized banks. The scope of concurrent audit is in branches is at a discretion of the head of internal audit of banks with prior approval of audit committee of board. This is also a portion of board. These were constituted by board. This is not an government authority, etc. This is also within the entity. And with regards to housekeeping, what do housekeeping does? Checking inward and outward remittances, check the transactions of staff accounts, detection and prevention of revenue leakages. Why do check for staff account is whether any kind of frauds that might could happen. Detection and prevention of any revenue leakages, ensure timely adjustment of large value entries, early reconciliation of entries outstanding in inter-branch and inter-bank accounts, suspense accounts, sundry debtors account, DDRR accounts, draft accounts. DDRR accounts was such as direct debit request accounts, where if a person has some EMI for car loan, and you could authorize your bank to make payment directly as on the due date of that. That's what the approval is for the bank, so that he could debit it customer account or its bank CASA holder account for that EMI or regular payments. This is with regards to that. And appointment of concurrent auditors. Who appoint them? At the option of the bank to appoint internal staff or external auditors. Who could be appointed? It could be appointed external auditors or internal staff. If internal staffs are appointed, they should be given a proper training and they should have some experience. If externals were given, they need to have a maximum tenure, like maximum 5 years, and if it's an auditor, maximum 3 years. This is not the term of rotation of auditors. For concurrent auditors, it's way lesser. For a single auditor, it's maximum 3 years, and a firm, it's a maximum 5-year term. If any serious act of omission or commission noticed in the working of external auditors, their appointment were cancelled and reported to RBI and ICI also. And remuneration of scope tenure is fixed by audit committee of board. And these all with regards to the appointment of concurrent auditors provisions. And yeah, with this, we have come to the end of our bank audit. Reporting systems of concurrent auditor. To whom the concurrent auditors report, on what matters the concurrent auditors have to report. A proper reporting of findings in a structured format. There should be a format for that. And a quarterly review. This is quarterly review of key features during the audit placed before ACB. That is, they have to, the ACB who appointed the concurrent auditors have to review the key features during the audit, that or report key findings, etc. And zone-wise reporting, annual appraisal report before ACB. Okay. Before submission, auditor shall discuss with branch manager. The fraudulent transactions detected, inform immediately to inspection and audit department of HO. Obviously, there will be an HO and chief vigilance officer and a branch manager unless he is involved. If any fraudulent transactions that were there, what he has to, whom do he have to inform? He have to inform with inspection and audit department, chief vigilance officer, branch manager, but not to the ACB. ACB, what do they do? You see, they're of a top level management, right? They concurrent auditors don't go with them directly. What do? They actually review quarterly ACBs. That's only the task, and this could be asked as an MCQ. Please make a note out of it. Not ACB. When there was a fraud that was involved, they they communicate or they inform immediately to inspection and audit department, chief vigilance officer, branch manager, unless he's involved. Any minor irregularities rectified should be in a timely manner. They need not report that, and follow-up action should be given a higher priority, and rectification done without any loss of time. As we have already said, what's our golden rule? When we identify any kind of risk, we have to give the remedial measures, and that is remedial measures. After that, we have to monitor that. We have to check whether they are constantly improved and consistently applied. And with that said, now we'll discuss the important topics in bank audit. As bank audit is a vast chapter, we'll discuss, we'll just brush up what all the important points are. We'll just know what are the must-do topics here. You see here, bank characteristics. It is so much important, not as a direct question, but to know what the bank audit is comprised of. This bank characteristics, something that's important, and this is not important. This elements, you need not remember that. Just read it once and you'll go. Financial statements of banks and appointing authority was important. And bank audit process, just read it 1 week before the exam, and you need not remember that. This is more, you could write it mostly with regards to the standards on accounting, the stages of initial considerations, undertakings, etc. And all the reporting process. And audit planning memorandum, you have to remember this definition. It could be asked as a 5 marks question. It was not asked until now, but when they asked, you could bank your 5 marks there. And with regards to IT and special consideration in IT environment, you could read it from here or from various other. There were 2 to 3 times that were there in special consideration for IT environment. You could either read it from here, but what I suggest is read it from the bank audit itself, because it covers a vast area. And with regards to security control, 1 week before the exam, you read it once, that's it. And risk-based internal audit is also important. You have to read that. And examples of internal controls, you need not remember everything. What you have to remember is only few. Cash, anyways, everybody will remember, as we already done our articleship exam. We could write it in general also. Remember this clearing one. Read this clearing one. Clearing. And not bills, collection, bills purchase were not so important. You could write it like normal loans account, right? You have to put register and all. You read it once and just leave that. And with regards to loans and advances, you read this one. Loans and advances are widely repeated in bank audits itself. In bank audit itself, you read this, portion, and you repeat that whenever they ask in what all context. And demand drafts not important. Inter-branch accounts were also not important. Credit card operations were so much important. They're important, and CRR SLR also important. And this audit of CRR SLR is important. And with regards to verification of assets and cash is not so important. Balance with RBI, it's not important here. And money at call and short notice is important. And with regards to investment policies is also important. And you see, we have learned here, right? The loans and advances, audit of loans and advances here. You repeat that here, verification of assets. In verification of assets, you repeat that and write mostly the same. It covers almost 70% of that. Remember the Iraq norms. Drawing power, important. And government guarantees was like, read it 1 week before the examination. And with regards to restructured advances and upgradation of accounts and sale and purchase of MPAs, these three were so important. And with regards to fixed assets, you need not write anything. You could write it from any standards on accounting or etc. You could write it in general. And these are not important. And with regards to capital is important. That is this one, right? Stress testing is important. And this formula was also important. This formula is important. They may ask as a problem for you. And deposits not important. This foreign currencies was important. This is a LP test until now, but it's an important one. Borrowings need not be asked. You could write loans and advances portion only till here, like external confirmations and all. And contingent liabilities is important. You have to learn this. You have to write it. All these things. Audit approach under contingent liabilities were not such important. And this audit report is also very good to go. This is all something read 1 week before the examination, and it's mostly the same. And LFR, these additional reports were also read it 1 week before the examination, and you're good to go for that. And concurrent audit, these key areas were important. And housekeeping was also important. And their appointment is not important. In appointment, also this tenure is important. This is something that's different from normal audit tenure. Normal audit tenure, that is 5 to 10 years. This is 3 years and 5 years. And this reporting is not that important, but under reporting, this fraudulent transactions were important. And these were all the important topics in bank audit. And happy learning, and please do like and share it with your friends. And we'll discuss on important questions also. Please subscribe and stay tuned to the channel. And thank you.